Hi, this is John with PDF Tax. This is Schedule E, which is the form that you would use if, for example, you had a rental house, and that's what we're going to look at today to see how that form works if you had a rental house. So we're going to say that we have a taxpayer here, Sam Smith, and we'll enter his social. And we're going to say that Sam purchased a rental house in June of 2017, and he collected $2,000 per month from June to December. So he collected a total of $12,000 rent on his rental house. So I'll put that right there. But we need to answer these questions here. Did he have payments which would require 1099? We'll say no, he didn't. But we also need to add an address here. So we'll just make up some address like that. Whoops, I guess we need a city too, huh? There we go. And now we need to enter this information, the type of property from the list below. The list is right here, and this is a single family residence, so we'll enter a 1 right here for type of property. And then they want to know how many days was that rented. So if it was rented from June to December, that would be 180 days, and there was no personal use days, and this box doesn't apply, so we'll leave that alone. Now we need to enter some expenses for this, which goes on these lines down here. So he probably had insurance that he paid, or not. Well, he might have had insurance, but mortgage interest that he paid when he bought the house. So let's suppose that he had $4,000 of mortgage interest. And then property tax, I'm sure he would have paid something in property tax. So let's suppose that that was $3,000. And maybe something for utilities. And there could be some other things here, management fees maybe, or advertising, I don't know, whatever he paid. But I'm going to leave those blank for now. And but I want to look at the depreciation on line 18. Let's suppose that he bought the house for $300,000, and he decided that he wanted to depreciate it. Of course, well, you can't depreciate the land, so you need to separate the land and the house. So he's figured out that the house is worth $200,000 and the land is worth $100,000. So he wants to depreciate $200,000 on line 18. So to do that, he will need to go down here to this 4562, and in this section right here is where he will enter his depreciation. So he has residential rental property, and the month and year placed in service is going to be 062017, like that. And the basis, like I said, is going to be 200,000, like that. And since he put this in service in June, he's going to select June right here. So that'll give him some depreciation of $39.40. And if he goes back up here to his Schedule E, the $39.40 came in right there. So his total expenses are $11,440, and his income is $12. So his net income here is $560, which is the total that we see coming down here on line 26, which is correct. So that is the amount that would go to 1040 line 17. So that is it. That's how Schedule E works if you have a rental property. Thanks for listening.